All right. Good evening, everybody. Hope you guys are doing well. Had a good end of the month in your trading. So just to get started here, right, we'll talk about the end of the January challenge, how that ended up going overall, and then we'll look ahead to February and see if we can't find any ideas to start off the month with for that challenge. So coming to a close here, right, January started off pretty well, and then there were a few trades that ended up sucking out our profits. So let's talk about that. So we only ended up doing 6 trades for the month in the challenge. We did one in CSCO, DraftKings, FISV, MET, PayPal, SPY, TXN, and WBA. And overall, right, started off strong. Like I mentioned, we had some nice profits in FISV and MET, PayPal. All of those ended up being nice. TXN. WBA, we were able to scrape off for a small profit, right? Basically break even on that trade when you think about that with commissions. But then there were a few trades that didn't quite work out. And so we'll walk through these. We'll talk about, what happened there, what we might be able to learn for the next challenge. But overall, when we net everything together, we ended up with a $60 loss. So this to me, obviously I would have loved a profit, but I'm not stressing about this. And this is what I think is so important and why I wanted to do this challenge to start off with, is understanding capital risk and how to be mindful of it, right? So in this challenge, we never bet the full $500 in anything. We were very mindful about how we broke apart our capital and where we put it. And ideally, right, typically we try and get enough winners to help offset the losers. But when that's not the case, we still don't have the losers, right, suck up our overall account value. I can't tell you how many times, I've talked with people and they've invested their entire account, right? Which, ends up being their life savings or something like that. And they end up completely overinvesting it, not understanding risk, not quite even understanding the technicals or how to go about it. And in turn, they're stuck with this huge drawdown that they can't even claw back out of, and they end up blowing out their account. And so, I've been there before where very early on in my trading, I didn't quite understand capital risk. And it led him to, for my Star Wars fans out there, it led into what I call the dark side of trading, right? That Sith evil side where it just, your emotions eat you up. You stay up late watching futures, right? Watching how China opens and Asia and how, Europe opens and everything like that. And you don't get much sleep. And then you're hoping a trade works out rather than just letting the technicals work out or letting your trading plan work out. And in turn, you end up with those staggering losses, right? So by doing this, we're still very mindful of our capital so we don't end up blowing out our account, even though our account's only $500. The idea is to learn how to be mindful of that risk while still trying to grow it overall. So ending up with a $60 loss, it's not something I like to see, but I know it's not blowing out our account. It's not even, $100 of the $500. It's less than that. So I'm okay with that. Next month, I'm going to start with a fresh $500, so I'll put this back into my account to even it back out again. But let's talk about each of these trades and see, was the signal valid, right? Did we maybe take too risky of a signal? Is there something that we can learn for next month? And so we can build off of that to try and get ahead, right? So CSCO, let's talk about that one. That one ended up being a losing trade. So we jumped into, and our trades are all listed up here above from what you can see. Oh, it looks like it only has the 6 of them. Sorry guys, let me go, there we go. We want the start of the month. Okay, 15 trades. There we go. So CSCO was right up here. We ended up jumping into 2 contracts of the January 22nd 46.48 call at a 54-cent net debit. So it ended up being about $108 of capital for our account. And we opened this trade back on the 12th. So let's zoom in here and go back to the 12th, which is right here on this bar. So it was a bullish divergent bar, right? Let's ignore everything after that so we can see exactly how we got into this trade, right? So we have a bullish divergent bar here off of the 10 and 30 period simple moving average as support. Bollinger Bands were starting to open up. It looks like they flattened a bit out, but that could be also affected currently by the next bar printing. So they were starting to open up. We have momentum building up from the 0 line, so it had a beautiful reset, right? And usually that indicates that we're starting to get some bullish sentiment back up and plenty of room to move higher. We have a bullish signal on the compound breakout tool, and we have a squeeze. So this to me would still be a setup I would jump into. Maybe I could look for the Bollinger Bands flaring open a bit more, right? Kind of like they were back here, like a wider range. But everything else about this looks like a good entry. The only thing that could have told us maybe to be a little bit cautious here was the fact that we did have back-to-back divergent bars, right? So the bar prior was a bearish divergent bar, which typically means we'll see some sort of lower low. We did technically follow through with a lower low, tested support, held it, bounced back up, and it made a bullish divergent bar. And so it doesn't matter what kind of bar, divergent bar type it is, right? Bullish or bearish. As long as there are two divergent bars back to back, it can be a sign of consolidation. Doesn't mean the signal can't follow through, but it might mean that we want to be a little bit more cautious of when it does and take our profits quickly, right? Or maybe look for a smaller profit target overall, maybe do smaller capital risk. So when we go to the next day, right, that's exactly what ended up happening. So this did follow through, and I remember watching this the next day. It gave I think maybe a $2 or $3 profit from what I saw, right? A $2 to $4 profit, I should say. It was on 2 contracts, but it was a very small profit, right? It was still basically break even. And then it reversed back down. But the reason why I stuck into this trade, right, is because the technicals were still on our side at the time. So we still were holding support. We still had momentum building up, still had the bullish signal on the compound breakout tool, still had a squeeze, right? So all that's a good sign for a move to the upside. And if the squeeze fires, that's certainly going to benefit us because it's usually a more dramatic move that's going to occur. The only thing that, once again, was going against us was the divergent bars being back to back. And at this point, the Bollinger Bands did start to flatten out. So maybe for next month, right? Maybe our clue is if we do jump into a riskier signal like this, one, right? Maybe we only do the 1 contract rather than the 2, and really keep our risk a lot smaller. And then 2, if it does end up doing this pullback where it's back to back, we just look to protect capital at that point, right? We don't even bother about trying to hold on for the signal, because then we're starting to go off of a different strategy, right? This would have been a bit more of a longer momentum trade when we're playing a bit more off the squeeze rather than it being a signal based off the divergent bar. So maybe I'll be a bit more stricter next month in my guidelines, right? Going back to the original rules rather than still playing off the bullish sentiment. So, of course, as we keep going, we went back down. We were still holding support, but then our compound breakout tool canceled out. Momentum started to give back. So this was another sign, right? Both of these are signs once again, well, especially on this day when it cancels out and prints a pullback signal, really. So this day right here was the sign that, okay, things are definitely going back more into consolidation or could start to reverse if we break support levels. And that's what we were seeing there. We did print a bullish divergent bar, right? That kind of kept me in the trade. That one didn't end up following through. This one did. But of course, by then, right, our trade was basically not worth much at all. And so where is it today? Well, it's still in consolidation. Momentum's bullish, but we have a consolidating signal still on the compound breakout tool. The squeeze is still printing. Bollinger Bands are still flat. Moving averages, they're technically stacked up, but they're still flat as well. And if anything, right, the price is dropping below the moving averages, so that's showing some weakness. The benefit for you, if you are still bullish, maybe on a longer term momentum trade here, is the fact that your Bollinger Bands aren't flaring open, right? So the fact that they're flat means they're not anticipating a strong move lower. It hurt us up here, right? Because they weren't anticipating a strong move higher, right? They started to flatten out on us. But that could benefit you if you're still trying to play this trade longer term. On CSCO. So, just to, let me pull up, it signed me out of Tastyworks. 1 second, guys. There we go. So if you did want to take a longer term trade on this, keep in mind earnings, it looks like are anticipated to be the 9th, according to Tastyworks. So if you're looking at this to try and be a run into earnings trade, first of all, of course, confirm on Monday that we're holding this level, we're bouncing up to confirm it's still a valid signal. But then you could go with something like the February 12th or the February monthly expiration. February 12th has pretty good open interest, right? Rather inexpensive for those of you in smaller accounts. And the idea here is that you play it up into the earnings announcement. So first, before we do that, let's see historically, right, with the last few earnings, does it follow through on that move higher? Here, yes, absolutely, right? Strong follow through to the upside, firm run up into earnings, even when it was in that bearish trend, right? We saw a nice reversal and move up into the announcement. Here wasn't as strong of a move. This is more like the pattern that we're seeing now. So this is a good example of what could be going to occur going into this earnings announcement, which is we do get the move higher, but it's not a very strong move higher. So might be mindful of where we put our strike in this case, as well as how much capital we put into the trade, right? If you're to take this trade idea here, overall move to the upside. And once again, not a very strong move up. It looks like right before the earnings announcement, unless it's, I can't recall if this announces in the morning. No, it was after. So right into the announcement, it looks like it sold off and then bounced up again from the news. But prior to that, it ran up into it. And then here, it ran up into the announcement as well. So it has, pretty good history of running up higher into the news. So watch to see how this holds going into early next week, and if we can maintain support here, or if it goes down to the ATR trailing stop like it did back here and holds support. Watch to see how that does, because if it looks like it's bouncing, maybe if it makes those bullish divergent bars again off those levels, you could look for a run into earnings trade. Now, given the fact that some of these moves higher into the announcement haven't been as strong, I would stick with an in the money strike that's going to help protect you against theta decay, as well as with the expiration being after earnings. So the idea is not to hold it through the announcement. The idea is to hold it up into the announcement, either, overall into the day of, or kind of seeing that one day where it's sold off into the announcement, maybe just have a profit target in mind and try and take it that way. But I would look at the 0.7 delta that's right now at the 42.50 strike. That's a 275 cost basis. For those of you who are new to options trading and don't know, the delta basically means that for every dollar move of the underlying price, that's how much the option strike increases or decreases by. And of course, as the option value increases, it gets a higher delta. As it decreases, it gets a lower delta. So ideally, right, if I got into the 42.50 strike, for every dollar move, I get roughly a 70-cent profit on the options. So not much open interest there. If you did want to go a little bit lower, probably the furthest I would go is the 44 strike, just because that's a nice amount of open interest. So that usually helps a bit more with liquidity of jumping in and out of an option. And then it's a 184 cost basis. So certainly inexpensive. This is, if we really wanted to, that would be a trade we could technically do in the challenge account. It's not what I am going to do for next month. But just an idea, if you guys wanted to look at that, with the idea that we'll hold support and we'll get some sort of bounce back up, ideally at least going back up to 46, maybe 46, 45 to test those highs, if not continuing to the upside from there. So that was CSCO. So overall, right, our entry was good. The only thing that told us to be hesitant was the back-to-back divergent bar. Everything else about that chart I still would have liked if I saw into today, right, to take a trade on. Because usually they work out a bit better than that. the next day, right, that was my clue to, okay, let's just get out of the trade. So that's what I'm going to be mindful of in next month. If I do take a trade based off a back-to-back divergent bar because everything else looks great, but the follow-through isn't very big, I might just go ahead and protect capital at that point. Now, maybe I miss out on the next day being a slam dunk, right? And we'll see how that goes and then maybe adjust the trading plan from there. But certainly to learn from taking the loss like we did here, I'm okay with that. And just so you guys know, for me personally, every trade that I jump into, whether it's here in this account and the challenge, if it's in my main account, the way I set up the risk for myself is I'm okay technically losing 100% of the capital. And that's why I try and mention that in every alert that I post on here, right? That I'm okay losing 100% of the capital risk. Because for myself personally, and maybe some of you guys have had this experience, whenever I put out a trade and I put a stop loss in, being like, okay, don't let me lose this amount of money, or at least on an options trade, right? Stocks and shares are a little different. But whenever I used to do that in the past, it felt like the moneymakers always brought down the price to where that stop loss would get triggered. And then after it got triggered and I would take the loss, right, the underlying price would actually then follow through on the move. So if I had just held on to the trade, it would have worked out in my favor. So because I've been burnt by that a few too many times, what I did to adjust my trading plan to where it still works for me is I've just kept my risks smaller on each individual trade I open. And that way I'm okay losing 100% of the capital if the trade and the signal don't follow through, right? And I decide to hold it into expiration like we did, for example, with CSCO. And that's just what helps me. So if for you, right, because everyone's different, if your trading plan, if your trading style means that stop losses are what you do, then please consider doing that, right? Take what I'm doing and adjust it to what fits your style. Or, certainly figure out what that trading plan is for yourself, figure out what your risk tolerance is, and maybe you go off indicators, right? Maybe if an indicator cancels out for you, or if it's something like this, that means you close out of the trade. But what I'm doing is what works for me. So I'm just sharing with y'all how usually I've been profitable with my accounts overall, or in this case, right, how I don't blow them out, right? How it's just a minimal loss where ideally we'll make it up within the next month and we'll still be profitable overall. So after CSCO, all right, let's just go down the list in alphabetical order. It was DraftKings. That one was also a loss. Now this one I already know what I could have done differently here, so I'm kind of just kicking myself about it more than anything. But we opened the trade on the 13th. So let's go over the details. So DraftKings, we opened the trade on the 13th. We jumped into the January 22nd, 57.50 call. We jumped in for an 88-cent debit. So it was a pretty low risk overall for a challenge account. Once again, let's zoom in. So the 13th was back here. So once again, it was a great signal. Let's zoom back, right? Don't want to hindsight trade. So let's go off of what we saw actually on that day, which is a bullish divergent bar, a break and the ATR trailing stop from resistance to support, the 10-period simple pointed up, getting ready to cross above that 30, so that's going to be going into a bullish trend. Momentum crossing and building above the zero line, that's usually bullish sentiment. A very nice bullish signal on the compound breakout tool. So all of that, once again, looks good. Now, the one issue here, right, other than, I guess, technically not being in a strong stacked up formation, is the fact that we had back-to-back divergent bars. So once again, that should have been our clue to maybe do a smaller capital risk, which in this case, to me, we did, right? 88 cents, not a very big risk. And then, right, also maybe setting a smaller profit target. So maybe that's where I probably should have adjusted this one. And let's talk about it, right? So the next day, beautiful follow through on the move. I was watching this partly through the morning and then I had to step away. So I didn't adjust the good till cancel. I thought, yeah, we'll probably hit. And as you can see here, right, beautiful bounce back up. We were just shy of our good till cancel hitting. It tested it a few times. For me, it never triggered. And then it sold back off into the close that day. Now, overall, right at that time, Bollinger Bands were still opening up. That 10 was right at the 30, so it's very much going to see that cross above it in the next day or two. We have the bullish sentiment and the compound breakout tool and the awesome oscillator. So all of this was still setting up to the upside. Yes, technically we were getting a bearish divergent bar, and once again back-to-back divergent bars, so still a sign of consolidation. But everything else about this was still pointing higher on DraftKings. So that's why I decided to stay in it. Now, in hindsight, I should have just adjusted that order, right? When I saw that it was hitting the level and wasn't taking, and I knew I had to step away to go into a room session, I should have just modified it and closed it out and let it be. So definitely for next month, right? If I see things get close and I know that I'm not going to be paying as much attention to the intraday charts, I'm going to go ahead and just close it out and take the profit. I know some of y'all did, from who I've talked to, y'all did end up taking the smaller profits. So for you, you might have still been positive for the month, for the challenge. But then after that, right, we pulled back, still made a bullish divergent bar. That one, let's keep going, did not end up following through, right? So there we just remained flat. We ended up canceling out of our bullish signal, so that might have been another sign to go ahead and protect capital. Then we just went into more consolidation. Now it started to bounce back up again, but of course by that point our trade had already expired. So maybe the second idea there, right, is giving ourselves just a little bit more time on the trade if we did want to hold past the signal, right, the actual trading plan. Overall for DraftKings, what I see currently is we're still choppy. Now, it did sell off with the market, but the good thing here, unlike a lot of other symbols that I was looking at on Friday, is we're still holding support and we're still in a bullish trend. Even with the sell-off, momentum was still a bullish bar for that day. So that's actually a good sign for the bulls that we could continue to move higher. And then, of course, we still have currently a valid bullish signal on the compound breakout tool. But otherwise, I wouldn't at this time expect a strong move to the upside, at least not as of yet, because Bollinger Bands are still flat. Now maybe Monday that changes and we open up strong, right? It forces those Bollinger Bands to start to flare open. But until then, if I were to take this as a trade, I'd probably lean towards put credit spreads, unbalanced put butterflies, things that are going to be taking advantage of that theta decay. So that way if it chops, as long as my trade's out of the money, I'll take a profit. And then, of course, if it moves higher, it's definitely going to be out of the money for that profit potential. So that was DraftKings. So after that was FISV. This one was a profit, so let's pull this one up. And the trade was up here. Yeah. So we jumped into this trade on January 6th. It was our first trade in the challenge. It was the January 15th, 115, 118 call, so a 3-point width spread for $1.02 cost basis. And then we closed out of it for $1.55. So that's where we get that 53-cent profit potential. So not a bad profit overall. In regards to where the trade was to close out of, right at $1.55, it still technically left plenty of profit on the table, so we knew we could take the profit quickly. It wasn't something we would technically have to hold into expiration. Like if we set it at $2.95, right, that one we're either need to see really deep in the money, or we're probably holding on to it until Friday into the close to get that fill. So what day was that again? It was the 6. Okay. So once again, let's zoom in here. Yeah, so here's our trade. We opened it on the 6th. Bullish divergent bar. This was definitely a riskier trade just because we didn't quite have the bullish trend. But I did like that momentum was trying to build back up. We had the bullish signal here. We, of course, had the squeeze. And what we also see here is the Bollinger Band still becoming very narrow. Now, typically, I like it when they're starting to flare open like we saw here. But the reason why I didn't mind it is because when you have a squeeze and you see the Bollinger Bands almost creating a pinch, or sometimes like what I like to call like a lobster claw, basically when that's paired with a squeeze, it can sometimes mean that squeeze is getting ready to fire, so it could be a bit more of a dramatic move that occurs. In this case, it wasn't, at least not to the upside. That squeeze went up a little bit, and then it ended up firing down. And you can see certainly a nice sell-off to the downside. But for us, right, our trade was just based on looking for a higher high. So the next day we technically bounced up, but we didn't follow through on the higher high. So some of y'all might have taken your profits off the table the next day, right? Just locked it in quickly, which I, never blame anyone for taking profits. But if you had held on for the second bar, right, which typically on these divergent bars, we give it 3 bars to see if the signal will follow through. So in this case, it was the second day, the second bar that it followed through with the higher high, and we took our profits. For me, it was a good trade to do it on. Now, it certainly looked like it could have continued higher. But once again, the only thing, right, that would have given you a little caution is we weren't technically in a bullish formation. It looked like we were going into one. But then that next day when we brought it back down, it flattened out the 10-period simple. And then certainly the following day when we broke support levels into the ATR trailing stop, that's what caused it to turn back down to where now it looks like it's trying to go a bit into a bearish trend here. So for me, certainly I wouldn't take any trade right now on FISV off the daily chart. Let's see if we're going to weekly support. So weekly, we're seeing a reset of momentum. We saw a pullback signal here. Looks like the 100 trying to hold a support. Once again, a benefit if you are bullish is notice the Bollinger Bands, they're not flaring open. They're still coming to meet the price. So that's a good sign where, we could just be seeing a bit of consolidation. And then, of course, we have earnings coming up. So I wouldn't be too surprised if it remained choppy into that earnings announcement, and then that might be the catalyst for a move one way or the other. That's oftentimes the case. So for me, I probably wouldn't take anything on FISV currently. Just better places to put your capital, right? So after that one was MET. That one was also a profit, a $42 profit. We jumped into that trade here. It was 2 contracts. So when it filled, it had the order broken apart on the fill, but it was 39 cents each. You can see it filled right at the same time. And it was the January 15th, the monthly expiration, 49.50, 50.50 call. So it was $1 with spread. So that's why we went with the 2 contracts, right? Which at 39 cents meant it was a 78-cent risk. So very small risk, even with the 2 contracts there. And then we closed it out at 60 cents for the 2 contracts. So nice profit to lock in. 60 cents based off the dollar width. Once again, still left money on the table. So it meant that we could have done it quickly. Hey there, great to see you, Sri. I'm not going to attempt it because I know I'll butcher it, but it's great to see you. Hope you're doing well. And yeah, guys, please feel free to ask any questions if you have any. But that one followed through nicely. So let's look at MET. We opened that one on the 11th. So back here. So yeah, I remember this one now. We had back-to-back divergent bars. So once again, that's a little risky. But like I mentioned, with divergent bar, there's still that good probability that it will follow through. It just might not be as strong of a follow through on the signal. And so we had a bullish divergent bar that printed the day prior that technically didn't follow through. And then we printed another bullish divergent bar. Once again, let's just back up so we can see the entry. On top of that, we had Bollinger Bands opening up. We just started to go into a bullish formation with the 10 crossing above the 30 and both above the 100. So that's looking good. Momentum is bullish with room to move higher, and a nice bullish signal on the compound breakout tool. So even though we had back-to-back divergent bars, I still really liked this signal with the fact that this one technically didn't follow through, and we're holding support going into a bullish trend, creating another bullish signal, right? So then it bounced up, and I think we took our profit that next day. Is that right? Yeah, we were out of it the next day, the next morning, at 10:25 at 60 cents. So I can't remember if I adjusted the good till cancel or if that's where it was at. But overall, nice bounce and move higher. It followed through on both of the bars for a follow through to the upside. This one just followed through literally the next day. This one, it took the 2 bars to follow through, but either way, that was our signal to go ahead and close it out and take the profits, right? Especially like we talked about with CSCO, when we have the back-to-back divergent bars, what we're going to do for next time if we take a signal like this is look to take the profits a bit more quickly, right? Same thing with DraftKings. Look to take that profit just a bit more quickly, if that's the case. So after MET, okay, well, first let me zoom back out and we can see where it's at now. So it had excellent continuation to the upside. So if anything, we could have held on for a bit more of a profit there because it went right in the money, right? Beautiful uptrend. And then we started to see a bit of a pullback. We went down towards support levels. It made some bullish divergent bars, but at the time, right, we started to cancel and get a pullback signal on the compound breakout tool. Momentum was dropping off. We were hitting the 10-period simple and holding it as resistance. So that was a bit of a sign for weakness. Technically, once again, the signals followed through based off this bar here, but then we immediately sold off into a bearish divergent bar. Basically, the 10-period held as resistance, and now we're down near our next support level to test it. So we'll see what happens. Right now, I'm not getting any sign to try and do a run into earnings trade on this. The overall trend is still bullish, but everything else about this is telling me that we're consolidating right now. So look to see how it opens on Monday, right? If we can bounce off of the ATR trailing stop, and if we can get these to turn back bullish, maybe do a short-term trade for a move higher into the announcement like we see here. But otherwise, I probably wouldn't take any action on this until either doing a lotto trade around earnings or holding it and looking at it after the announcement in the news. The bullish entry on BTC? No, I didn't. Let me write that down. We'll take a look at that in a second after we get through this. But yeah, that's what I love about that divergent bar signal, because it has pretty good accuracy, right, of following through. So it makes trading pretty fun, right? And like I said, for both of these losses, right, technically the signal followed through on both of them. It barely followed through. And then the second one, I just, didn't modify the good till cancel like I should have to turn that from a loss into a profit. So PayPal was next. Let's take a look at that. So PayPal, there's the chart. Let's go up to our trade. So we opened, there's our selling. There we go. We opened it on the 11th. As the 240-242.50, we are in for a 95-cent debit. So not a bad risk versus reward on the trade. Certainly relatively small risk for the account. And we opened that, I think this was based off the weekly chart if I remember correctly. And then we closed it on the 13th. So we were only in it for 2 days. And we closed it at $1.45. So a nice 50-cent profit. That was a good till cancel trigger. Let me go back. It was on the 11th. So let's zoom in here. Let me confirm it was, well, we did make the bullish divergent bar here. Let me double check though. I usually don't open trades in the morning, which means, yeah, it was definitely based off the weekly. So, so I remember what happened. So if y'all recall or watched the vid, from this update back on Friday, I ran into internet issues. I wasn't able to open the trades like I wanted to Friday going into the close, and it was very frustrating because there are a lot of excellent weekly signals that were setting up on that particular week back on the 4th. You don't get them, I wouldn't say it's not common, but it's not uncommon, right? They happen several times, I feel like, throughout the year where the overall price in the market pulls back and then it bounces up and it creates these great weekly signals going into the close of the week, right? It starts off low and ends up high for a lot of symbols, and it usually has great follow through. So Eli Lilly was one of those that had a beautiful setup that was on my radar going into Friday, and unfortunately with the internet issues I wasn't able to do any trading that day. So what I did, right, to have a game plan and be flexible with it, was I took a look at those signals. I took a look at them at Monday morning, and the ones that hadn't technically followed through on Monday, I decided to open that day to see then if I couldn't get the follow through later in the next few weeks. So as you can see there, the open was below that level, which is why we jumped into it. But overall, from this signal, right, once again, Bollinger Band's opening up, right? Let's go back to when it printed. No, there we go. Bollinger Bands are opening up. We bounced off of support levels with a bullish divergent bar. Momentum's bullish with room to move higher. Great bullish signal on the compound breakout tool. So all of that was a good sign to say, hey, jump into this and play it to the upside. So when it didn't follow through on Monday, that's when I jumped in. And then, of course, we closed it out that week. Had you held on to the trade, right? We definitely continued higher until this week, this past week came up, right? And then we sold off with the rest of the market. But notice where we sold off into. It's right into support levels. We do see momentum pulling back a bit. Still a strong bullish signal on the weekly chart. And it could be that we just start to chop a bit going into earnings. That's not too uncommon for PayPal. So on the daily chart here, right, it certainly matches up with consolidating into the announcement. We went down, tested support, bounced back up, but are still holding the 10 and 30 as resistance. Momentum still resetting. We still technically have a pullback signal, which means we could go back down and test support once again. And then we're trying to print a squeeze. So more than likely to me, that squeeze will print into the announcement. Unless something comes out prior, to me, this looks like just consolidation into that news. So unless, once again, it's like an earnings lotto trade to hold through the announcement, I probably wouldn't touch PayPal until after it occurs. But very nice profit, very nice follow through to the upside. And it certainly benefited us on the 11th going into the close that day that it also made a bullish diversion bar, because that just gave us better validity that if we do get a follow through on the weekly signal, there's a good probability it would be that week. And then, of course, the next day didn't follow through on a higher high, but still made another bullish divergent bar, still held support. And then the 13th, when our good till cancel triggered, excellent move to the upside. So that's PayPal, SPY. So SPY, we jumped into 2 trades on, right? These were kind of more trades to help manage the drawdowns on CSCO and DKNG. So the first trade, both of the trades were broken wing butterflies that we jumped into. On the first trade, we jumped in for 75-cent debit. It was the 384, 387, 388. We closed out of that just because we are going into expiration that week, right? Opened on the 20th. Expiration was the 22nd. On the 21st, seeing that we're struggling to get up towards those levels, we just closed the trade out for a small profit. We decided to give ourselves more time, thinking that going into the end of the January, the bullish trend would continue, which, of course, we know it did not. So we pushed it out. We adjusted our strikes a little bit higher. Once again, jumped in at 87 cents debit, so I'm not mad about that debit that we jumped in at. However, that one ended up expiring for worthless, so we took the full loss. So when we net the profit that we took here, which was 34 cents, and we take it away from that and SPY, right, that's how we end up with the $53 loss. So very small loss, right? Our worst loss was definitely in CSCO. So this one wasn't too bad. Definitely was covered by just one of our profits. So I'm not too mad about that for SPY. If anything, right, just maybe stayed in it a bit too long, thinking that the market was going to bounce back up. We held support on the 30, which I liked. Going into the end of last week, the last few times that we've done that on SPY and SPX, we've usually seen a follow through and a bounce to the upside, and a move towards higher highs. We tried to do that the next day, still held the 30, which is why I was like, okay, this trade isn't worth much value at this point, so let's just see what happens from here. And then, of course, we sold off. Now, this is something I'll come back and talk about, but this is what's certainly going to cause me a bit of caution going into the start of February on a potential sell-off or a bit stronger of a pullback maybe. So we'll talk about that here in a second, but let's finish up with the trades. TXN was the next one. Took a $40 profit there. So let's pull that one up. We jumped into this on the 14th, closed out of it on the 19th. We are in the January 22nd, 172.50, 175 call. Jumped in for a 97-cent cost basis, closed out at $1.37. So let me go ahead and pull this one up. So jumped in on the 14th, that was here, right? So let's once again go back in time, see if our entry made sense. So bullish trend, Bollinger Bands were opening up. Bullish momentum, bullish signal on the compound breakout tool, bullish divergent bar, right? All of that looks good to the upside. Next day, did not follow through, but this is why we give ourselves 3 days to see if the signal will work out. We held support, and then the day after that, strong follow through to the upside, certainly followed through with the higher high. I think this is one where I was watching the intraday charts, and it, much like DraftKings, right, was a moment where I was about to step away to go do something else for work. It looked like the intraday charts might have been stalling out, so I closed out of the trade and took the profit there. Had you held on, I believe the good till cancel did trigger on this, certainly between the next 2 days. So good job if you did. I know some of y'all did. But, right, so this is, kind of did what I should have done on DraftKings and what I plan to do and adapt for my trading plan for the next challenge in February. So, glad to know I did that, right? It happened on the one that it didn't need to happen for. But it is what it is. Won't ever complain about a profit. So overall, nice move to the upside. And then TXN started to follow through, got a bit of choppiness here. Neither of these bullish divergent bars actually followed through, so kind of glad we didn't jump into a trade after that on here. It was also going right into the earnings, so if you took this trade, earnings could have been the catalyst for that higher high, but holding any trades through earnings is a complete lotto trade, and it should be known, right? So no matter what, even if you have excellent signals all pointing in the same direction, if they come out with bad news or a bad forecast or anything that the market just does not want to hear, you can anticipate all of those technicals getting erased. So that's why, especially on short-term trades, right, unless it's shares or something like that, on short-term trades, if you're holding it through earnings, understand that you need to be okay losing 100% of that capital. So this one you might have tried to take, and then it didn't follow through going into the announcement, you closed out of it. But this one here was a lotto trade, because if you're trying to give yourself the 3 bars for it to work out, you only technically gave yourself 1 day to see if it would. So that was TXN. Worked out as it should have. No complaints there. And then WBA Walgreens, where we squeezed out that small profit and protected capital. So opened it on the 20th. Whereas in the 48.50 call, it was a 61-cent debit. And then we closed out of it on the 26th for a 65-cent credit. So overall, the risk certainly wasn't very high on Walgreens, which is good to see. Let me go back to this. So we opened it on the 20th. Okay. Which was here. Right. Okay. I remember now. So we opened it on the 20th. Let's once again scroll back in time. So overall, right, I did like the signal for the most part, because we had a bullish divergent bar back here that technically hadn't followed through. So kind of like what we talked about earlier on an earlier trade, right, where it had back-to-back bullish divergent bars and the first one didn't follow through. This gave me a better probability that the next day it could follow through to the upside. It was also holding support overall. Now, momentum was starting to pull back, so that was a sign that we might start to see consolidation. Maybe I should be a little cautious. But the bars are overall above the 0 line, which adds to the bullish strength. And then a bullish signal on the compound breakout tool. Bollinger Bands themselves still strongly opening to the upside, and plenty of room just within the comfort zone to see a follow through on that higher high. Now, the next day, we didn't get the higher high, right? We started to cancel out of our bullish signal. Momentum was continuing to pull back. I still didn't mind, though, because, once again, technically we give ourselves 3 bars from the day we take the signal for it to follow through. So this was only our first day. Second day it pulled back, but then it made another bullish divergent bar. Once again, more of the technicals were starting to go against us, right? All three of the lines on the compound breakout tool were telling us that this was pulling back. And then, of course, momentum was pulling back still. Next day, we did follow through on the higher high here, bouncing back up towards the 10-period simple. Bollinger Bands were still opening up, so they're still trying to make room for the price, right, even though it's well above us. Momentum, however, was still pulling back, and we still had the pullback signal here, so was cautious, but because it was a small capital risk on the trade, decided to give myself past the 3 days to hold on to it. And then it was that following day that we closed it out. And I think we could have gotten a bit better of a profit than what I did. But as soon as I saw that trade turn back around, knowing the losses that we took on the other ones, I was okay very much just closing that out towards break even and taking it off the table. Certainly, it was also nice to see on the compound breakout tool, our pullback satisfied ourselves with the move down to 46 and canceled back out. So that's a good sign back for the bulls again. And then momentum was still pulling back there. So, that's still showing a sign of a pullback or consolidation in the price, which is what we saw. And then, of course, had we held on one more day, beautiful gap to the upside. So if you did hold on to Walgreens, right, did end up seeing a very nice follow through. It just technically was outside the time frame that I usually give myself for the trade. So, hindsight trading, yes, maybe I should have closed out of it, but waited to close out of it for a bit better of a profit. But I'm not gonna beat myself up about it because I know, one, where the account was at the time, right? And I know the follow through that we got here. And when we took off the trade, technically the only good signal that was coming about from this was the fact that we were canceling out of the pullback signal. Otherwise, right, momentum was still pulling back. So we still could have been hanging out here. We weren't breaking above the highs that we had back here on the close of this bar. So, all of those are signs to be cautious. And then, of course, it did end up bouncing to the upside. Then we started to get the bullish signals. And then from there, we've pulled back. But notice that the pullback is happening more on bullish strength now, both with the momentum and the compound breakout tool. So overall, Walgreens, as of right now, I'd still probably be a bit more bullish on. We do see Bollinger Bands flattening out, though, so that could be a sign that here's the consolidation, right? I thought it might have started to happen back here, but we got that last trigger to the upside, so here we might start to consolidate and pull back a bit more. Really quickly on the weekly chart, right? Walgreens has been certainly bearish for a while on the weekly aspect, but with this past week, we've pulled back, and so the question now, if you're trying to remain in Walgreens longer term, right, if you're in shares or something, is watch to see if it holds the 100-period simple on the weekly chart. If it can hold this level as support, then that's a good sign it might be trying to find some footing and finally seeing some sort of reversal of this bearish trend here. Otherwise, right, if it starts to break below that level, and certainly it didn't make a bearish divergent bar for the week, be cautious of a move back down to 43.60, all the way down to 40. Certainly if it breaks 40, I would anticipate a move back down to 35 at the lows there. And so that was it, right? Those were our trades that we jumped into. And then that's how it all equaled out between the profits and losses. So like I mentioned, certainly, would have wished for a bit better. It's just slightly above a 10% loss for the account, right? 10% would have been $50 at 60 on a $500 account. So not the best place, but certainly not the worst. We'll start back up with a fresh $500 for next month, and then we'll see where we can go from there. So I know you mentioned BTC, right? That's the symbol. Let's go ahead and pull that up. I'd be curious to see that one. Yeah, so there's a nice bullish divergent bar, certainly on the monthly that followed through. Let's pull it back to the daily time frame. I think or swim. Market's not even open. This should not take this long. well. I feel like as soon as I hit it, it will pop up and then reset. Let me just try a different chart really quickly. Okay, yeah, no, it's just BTC. So I'll give it one more second, see if it will just load back up. But if not, if there are any other symbols that you guys want to take a look at, let me know. Otherwise, what I'll do is I'll go back to SPY really quickly to talk about that one. So it's not loading up. It loaded up on the monthly just fine. But I wrote that one down, so I'll check that out later this weekend or on Monday. But SPY, so here's what slightly concerns me about SPY over on a 4-hour chart. There we go. So what happened both on SPY and SPX, typically, right, what I look for is as long as we hold the 30 period simple and then the ATR trailing stop when it's trading close to that level, to me, we're still in a bullish trend, right? Things are still going to the upside. I'm still going to remain overall bullish on the pattern in my account, which is exactly how we played the challenge, right? All of those trades were bullish trade ideas. But going into Friday, we were going in between whether or not we were going to break the ATR trailing stop and turn it into resistance, which is what happened to the close, or if it was going to hold as support. It was kind of literally chopping like the last 5-10 minutes of market. And then we sold off right into the close. And so we flipped the ATR trailing stop from support into resistance. So now we've strongly broken below the 30 and we've broken below the ATR trailing stop. On top of that, as of right now, Bollinger Bands are starting to open up to the downside, right? They're starting to open from what was consolidation. Now, if we bounce up strongly on Monday, you can anticipate the Bollinger Bands will probably flatten back out, but certainly not a good sign to see going into a close Friday. Momentum is resetting towards the 0 line. Here, we still have a sign of consolidation, so that might help us out going into Monday on the compound breakout tool. But overall, this to me is a sign of weakness. So when I see this start to occur, it's a sign that I'll go ahead and start looking at hedges. So in one of my accounts, I already do have a hedge on in SPY. It's for next week's expiration. It's the broken wing butterfly. Small capital risk for this account, so I'm not too concerned about it. But it's the 368, 363, 360. So the idea here is if we do sell off and go down to 363, which would be right around not only where the third deviation lower Bollinger Band is, but it's just slightly below where we've been pausing here on SPY, right? Since we've broken above really 364.50 on SPY on the daily chart, it's been overall holding as a level of support for the price. So that's right just slightly below where my short strike is at 363. Part of the reason why I chose it. But you can see here, right, if we did sell off back into that level, then on our trade, it gives us the max profit potential. If, let's say we got in at 77 cents. I think I got in at 75 cents. So at a 75-cent cost basis, the max profit potential if we pin here is 425. I technically hold 2 contracts, so my max profit potential is 850. If this stays completely out of the money, if it bounces up, then I have a risk of $150. So the idea behind a hedge trade like this is you technically don't really want it to work out, right? The idea is you want the market to bounce back up if all your trades are bullish in your account, and you want those bullish trades to work out and to give you a profit. The idea behind a hedge or an insurance trade like this is that you're doing it for a very small capital amount, where ideally within a trade or two, this amount and capital risk can be completely made up. So within this account, within a trade or two, this amount could easily be made up, certainly within 3. So I'm not too concerned about the capital risk there. However, right, if it does sell off, the profit potential can help even out some of my bullish trades, ideally all of them, if not a good chunk of them, so that if the market sells off, my bullish trades aren't creating that drawdown and eating away at my profits or eating away at my account value going into the pullback. So if it pins 850 max profit potential, but this is where the forgiveness factor comes with a broken wing butterfly. If we completely sell off, right, if this just tumbles and we go down to the 100 period simple at 355 to test that as support into next week, well, I still will be able to have a profit on this trade of, it's 3 points here, 5 points here. So you take the 3 away from the 5 and you're left with 2 points on the debit spread. So $2 minus 75 cents means $1.25. So that's the profit potential I have if it completely goes in the money. And of course, because I have 2 contracts, $1.25 times 2 is $2.50. So it will at least help, once again, offset a few of my bullish trades that I have in my account. And more importantly, gives me that forgiveness factor if it really does decide to sell off and not stall at that price support level around $64. So overall, that's one of the hedge trades I have on. So if we do end up seeing this occur, I might consider putting a trade similar to this on for the challenge account. I might only do 1 contract instead of 2 for the challenge. Might use a different expiration as well. Might give ourselves a little bit more time and go out to the 12th, right? Go out 2 weeks instead of 1 week. Just to benefit us there. But I'd still probably keep it in SPY because that cost basis fits with our risk tolerance for this account. Hey, Old Fat Carl, great to see you in here. Yeah, I'm happy that we got into it too. Now, it might be that, right, it still bounces up into February. Who knows what Monday's market's going to bring with everything. But when I see that on the technical side, when we saw that break into the close, it just, especially with the Bollinger Band starting to open up, right? They didn't remain flat like they did here or even back here when we tried to hold and test those levels. To me, it's just like, okay, it might be a short-term pullback like we saw back here or back here. Or even this one where it just lasted a few days, but certainly it was enough of a pullback to where if we see something like this and then it looks like we could bounce, we'll have time to take a profit, right? So that's what we'll be watching. On the longer time frames, though, keep in mind the longer time frames are overall bullish, but we're pulling back. So once again, on the weekly chart, we canceled out of our bullish signal, another sign to potentially look at doing a hedge. It could be that we just pulled back to the 10 again, right? We technically closed below that level, but we're still hanging out right around it. However, momentum could use a bit of a pullback. Bollinger Bands are starting to flatten out, whereas before, even on these bearish divergent bars, they were still opening up. We still had bullish signals down here. So that's what makes this one slightly different, right? Is unlike these, where Bollinger Bands were still opening up and we still had the bullish signal here, now we don't have the bullish signal anymore. We've technically broken the 10, right? We're not still holding it on those bearish divergent bars. And Bollinger Bands are starting to flatten out a bit more. So does this mean I think that we're going to see a sell-off like we did here? No, at least not as of yet. Hopefully not. Well, and if we do, right, maybe we just tell ourselves, okay, look for that bullish divergent bar for the buying opportunity again. But otherwise, no, I think this is just going to be maybe a bit of consolidation, maybe just a pullback down to the 30 and ATR trailing stop on the weekly chart like we saw here or back here, right? Just a quick test of those support levels. It would allow momentum to reset at least a little bit before potentially continuing in the longer term bullish trend. And then of course, when we take a look at the longer time frame on the monthly chart, we actually got a long-term bullish signal going into the end of the year on SPY, which was we actually broke resistance on the ATR trailing stop, turning it into support. Notice compound breakout to a bullish, momentum bullish, Bollinger Bands opening up. This month, right, for January, we close as a bearish divergent bar. So what does that mean? Well, technically it's a counter trend signal, so it's less likely to work out. But it does mean that we could still see a lower low and a pullback. Now, would that make sense? Yeah, we're trading near the upper Bollinger Band, which, you know, the index can certainly do, but it's not near the price's comfort zone. So to see a pullback into support, which on SPY could be all the way down to $334, right, on the monthly time frame, that would be our first level of support. 300 would be our second level of support. That'd be a nice, strong psychological level to test. It doesn't mean that we're still not in a bullish trend. And the reason why I say this was a very strong bullish signal is because on a weekly and monthly time frame, when you get that ATR trailing stop switch from resistance to support, I mean, of course, go back and do your homework on the symbol. Make sure it is one that follows through on the signal. But when you see that, that usually triggers a longer term bullish trend to jump into. So when I see that, right, if you have a larger account, it's usually a sign for me to jump into shares, or to certainly jump into a leap, or to at least start facing my overall trades for that symbol as bullish trades, especially when they're bouncing off support levels for longer term. So doesn't mean we can't pull back. But here's a great example of how that signal switched last time on the monthly chart. Back here in 2010, right after this whole housing crisis situation, and then we got the bullish signal. We went from, what was it, 130 all the way up to highs of 330 before it pulled back on SPY. And SPY, of course, is the ETF of SPX. So the same thing is true with SPX. On the only 2 times that we've ever broken the ATR trailing stop was during the dot-com bubble into the early 2000s and during the housing crisis in 2008 and bounced back up. That's why when we broke it during the pandemic, I was very cautious about how soon this recovery would be, because from a historical standpoint, the pullback lasted a year to 2 years on both times. And then the move back up lasted quite a few longer to get back up to the highs that we were at prior to the pullback. I think overall the moves from the move down to the move back up lasted like 5 to 7 years, right? Until we got back up towards those highs. So when I saw this, I was very concerned. But at the same time, right, this monthly range, we've never seen a monthly range like this in the indexes, certainly not in SPY and SPX before. And this monthly range basically encompassed the same amount of point move that we saw in these pullbacks that lasted a few years. So, right, or a year and a half to 2 years, right? So the monthly range ate up that entire pullback time frame of a few years. And then the recovery, right, almost the exact same thing. Instead of it lasting, several years, like 5 years for it to bounce back up, it was, 5 months for it to get those higher highs? 4 months for it to get the higher highs? So, this is kind of an anomaly all in itself. But when I see that trigger print from resistance back to support, I know that's a good sign overall that the market's trying to turn back bullish. Now, maybe it will be a sign of it's a sharp move just like this was, and we start to actually see just very wide ranges of consolidation. That could be it, right? Who knows? But right now, for what I am seeing on the technicals, this here, and here it is on SPX, right? This here is a bullish sign. And other than the bearish divergent bar signaling that we might pull back, there's nothing else on these indicators telling me to go bearish on this long term. There's nothing telling me as of yet to prepare for a sell-off again. Now, the ATR trailing stop is a ways away, right? It's at 27.72 for SPX. So, keep that in mind. If we do really start to see a break in the market again, right now, the ATR trailing stop is a ways away for that to occur. So watch your other support levels, right? Watch your other technicals, see if they're canceling out or not. But as of right now, to me, the bearish divergent bar looks more like a pullback. Now, if we create maybe a second bearish divergent bar, or that pullback is starting to break lower support levels and we have a volatile month like we did here in February, then yeah, you better believe I'll be a bit more mindful in case we have a March that we had like last year. But right now, it's way too soon to consider that, especially with how everything else is looking. So short term, right, I have a short term hedge on because of the short term break, but I'm not expecting something like this. At least not as of yet. I'm not getting any signs of that. Right now, to me, it's looking more like one of these pullbacks where it's like, okay, we'll go down and we'll test support, or we'll test the price support level. So we'll see what happens. But the fact is, even if we do get that strong sell-off, that's exactly why the hedge trade that we have is set up for that forgiveness factor. So it's set up for just the short pullback, right? Just a small pullback. We don't even need that strong of a move down to get in the money. Thanks so much, Dakudo. Great to see you in here. So we don't even need that strong of a pullback for this hedge to start to be profitable. And then, of course, if it sells off completely, then we have that forgiveness factor to still take some sort of profit to the downside. So I'll stay on a little bit longer if there's anything else that you guys want to look at. Thanks so much for the gifted subs, Takudo. I appreciate that. And yeah, for those of you who don't know, if you are an Amazon Prime member, you can technically sub for free, and then you get our fun little emotes that we have for the channel, which are these right there. Yeah, if you guys have any symbols that you want to take a look at, let me know. But that's what I am cautious of going into next month. As of symbols that I did want to keep an eye on, if you guys don't have anything, MVDA on the weekly chart is something I want to keep a close eye on. It has earnings coming up. It made a bullish divergent bar last week. Now, once again, back-to-back divergent bars. So do need to be cautious on it maybe not having a strong follow-through on the signal, especially because the compound breakout tool is also more in line with consolidation. But what I liked is that last week we didn't follow through on the signal and we pulled back. So it's technically still a valid signal, and we're right back towards the lows of the bars. So if we can hold support, and on Monday we're opening around these levels, if we start to get some more bullish signs here, or on the daily chart, things look like they're holding and bouncing back up, I wouldn't mind taking a trade idea off of this divergent bar, just because even if it's not a strong follow through for a higher high, or even if we don't get all the way up there and we just go back up and test 550, compared to where we're trading now, that could allow for a quick profit on a move higher. So we'll see what happens on that. Trade idea wise, we could still do something that benefits slightly from theta decay, or we could do it for just a bit more of a directional play like we've been doing, like with vertical debit spreads for the account. Which is weird. I just realized MVDA on Tastyworks is saying earnings is the 11th, but on Thinkorswim it's pointing it at the 22nd. So I'm not, or on the 24th, excuse me. So I'm not quite sure who's right. If it's the 24th, then I certainly like this trade idea. If it's the 11th, then I wouldn't hold it through earnings, so I'd probably nix it. And then lows, unfortunately, this was one I was keeping an eye on going into Friday, and then Friday it just completely sold off and erased the signal on us. But on Thursday, this was making a very nice bullish divergent bar. It was, of course, going into a bullish trend. We had great bullish signals down here and a squeeze. So I loved the idea of taking that follow through, because lows on a weekly chart usually has pretty good follow through on that divergent bar signal to the upside. But unfortunately, it just didn't print. So I'll be keeping my eye out. It might be that we just keep to more shorter term signals. I do want to be mindful of the February month, right? Because technically not as many trading days, just because it's a shorter month overall. But I'll still probably look at weekly setups for the first 2, maybe the 3 weeks. Definitely the first 2. And then after that, I might stick more with daily setups. So that way we can be completely closed out of our trades going into the 26th, which is the last trading day for the month. So thank y'all for joining me today. Overview for our challenge. So as I mentioned, just to give a wrap up for what I'm looking at ahead in February, we'll start off once again with $500. I do want to be mindful of the support levels that we're breaking in SPX and SPY. If it does look like we're getting a bit of a pullback, then you can anticipate seeing a bit more of a mix between bullish and bearish trade ideas for the challenge account, as well as if y'all are following along in the mastery and things like that, you can anticipate a bit more of a mixture between bullish and bearish setups. If it looks like we're immediately bouncing back up and moving higher, then I'll probably stick back with more bullish setups and not fight the trend, right? Not fight the market. But if it looks like we're selling off a bit, or we're seeing consolidation and a pullback, I might start to find a bit more of an even mix of those trade ideas. So that way, if the market starts to sell off like it did last week in January, right, our entire account doesn't get hurt by that. So thank you guys for joining me. I hope you have a great rest of your weekend. Stay safe out there. And we'll start looking for new trade ideas on Monday. And ideally, right, if things go well next Friday, we will look to have another one of these Friday in the evening. So I look forward to talking with y'all then. Thanks, old fat Carl. Appreciate it. Have a great one. Night, guys.